Another day and another dollar lost for Bitcoin long positions as Bitcoin successfully reaches new lows, clearing out an unprecedented amount of liquidations yet again. This is lining up to be our fifth consecutive bearish closure. Now, it is important to remember that there are three movements in the market. This goes back to the Dow theory established by Charles Dow. The market only has three movements. There is the primary movement. This is the major trend that often lasts for months or years. When we look at this chart of Bitcoin, let me zoom out a little bit. When we look at this chart of Bitcoin, what is the primary movement? What is the primary trend? It's bullish. You really need to look no further than the 200 daily exponential moving average or simple moving average. Its slope and angle tells you what the primary trend is. As we can see, the 200 EMA is trending up. We are in a bull market. We are in a bullish trend. That is the primary movement of the market. Next, there is the secondary movement. These are going to be corrections or retracements within the market that go against the primary movement, but are not able to successfully reverse the primary trend. So of course, we can see many secondary movements, rejections, corrections within the primary trend that do not end the trend. Finally, there are the third movements or the minor movements. These are going to be the daily fluctuations that are relatively insignificant to either the primary or secondary movements. They are caused by investor psychology or short-term catalysts like news events. Now, as we can see, we do appear to be in an area of the market where potentially we are shifting from the markup phase to the distribution phase, or perhaps we're well into the distribution phase. Can we look on chain and see what the long-term holders are doing with their Bitcoins? Well, yes, we can. On-chain analytics from Glassnode can let us see exactly what long-term holders are doing. Now, I have seen nothing but content creation over the past few weeks about how long-term holders have distributed and they are selling more than they've ever sold before. There are some pretty popular streamers on crypto YouTube that are continuing to drive that narrative. But if you actually look at the data, we can see a bit of a different picture. Yes, long-term holders distributed heavily into the price surge up to the new all-time highs, but following the pretty significant correction down here to 59,000, we can see the investor sentiment of long-term holders shift, and they have shifted back into accumulation. This chart shows the total supply of Bitcoin that is held by long-term holders, those who have held their Bitcoins for longer than a year. And as we can see, they have begun reaccumulating BTC, even as price pushed back up to the highs. So we have clear reaccumulation. This indicator shows the long-term holder net position change. That is, what is there? It's essentially something like the same chart, but it's just a little bit different. We can see how have their positions changed, and we can see that, yes, just like in the last chart, we saw massive distribution in two waves leading up to the all-time high. We saw a lot of distribution here, and then we really spiked in distribution here, I think reaching a high of dropping in this day 522,000 Bitcoin. But again, ever since that dip to 59,000, we have begun to see the long-term holders begin to reaccumulate. So as Bitcoin's price comes lower, they are beginning to pick it back up. Now, as I said in yesterday's market update, failing to hold the support yesterday was pretty critical. And we, of course, were unable to hold the support. We did end up plunging down and reaching new weekly lows. Today, we traded at a low of 63,379. So the catalyst for moving up is getting much more strained. It is much harder to form a swing trade, bullish narrative back up to the upside. We also have to remember that whether we're in distribution or reaccumulation, depending on which way price goes, we certainly are in a range. And so range trading tactics are going to take precedence over trend following tactics. When we are in a range, the market will establish a fair or median price, and market makers or traders will oscillate price above and below that fair market price. Everyone's happy to trade at the fair market price, and everybody gets scared up here and everybody gets scared down here. But the way to trade a range is to take positions to the short side up here or be buyers down here and sell up here conversely. You have to be willing to trade into these high value or low value areas of the market. So we can see the high and low value areas with the volume profile technical indicator, which allows us to see that currently the value area low basically stretches all the way down to 61,000, and we have a deviation of that down to 59,000. The value area high is about 69,000 to 72,000. And we can see the point of control right here, the red line in the middle, around $67,000. All right. So $67,000 is the fair range of, $67,000 is the fair price of this range. And this is essentially where the market wants to return to. And we have to have the conviction, if you want to trade this range, to buy low and sell high and to trade these oscillations until we form a clear trend, a breakdown or breakout of this range. Now, as we can see, there does seem to be the second highest spike on the volume profile here, stretching from right about where we're at, the $63,000 zone, down to about the high $62,000 zone. And then we can see that volume really drops off. All right. People were not happy to trade at these prices. One of two scenarios is going to happen here. We are going to find support here, and we're going to oscillate back to the point of control or slightly higher. Long traders will get trapped because they will be trying to take breakout trades. More intelligent traders will be opening up short positions, and then price will likely be brought back down to this zone where not a lot of individuals had the conviction to buy. This would be kind of the high value area, not value area high, but a high value area to be bidding BTC up. So it does seem like a retest of 60K and lower is almost inevitable. And the only thing on the cards right now is when the market is going to push price back up to the fair price or slightly higher to trap long traders before that movement to the downside. It's also possible that that doesn't happen. And what we should follow is the strengths of the daily closes. We have seen no conviction from the bulls, no ability to push price up and stabilize price. Every time the bulls have pushed price up, it's just been sold into and we've descended lower. All right. So we don't want to keep getting trapped in these maneuvers. Looking at the liquidation heat map on Binance, where the most volume is traded for BTC, we can see, of course, that longs have stacked their liquidations very close to price range, with a liquidation cluster stretching at 34 million all the way down to 62,918. That's where the highest depth of liquidations are at that price point. And of course, pretty thick all the way down to there. We have formed something like a triple bottom here, but I would be willing to bet that we will see a sweep of this liquidity before we push up here and start liquidating these shorts as well. Looking at our large limit orders, again, we also do have some pretty significant support down at that price point of $63,000. We have a large limit order with a combined liquidity of about $15 million there. We have a slightly smaller one here for about $646,000. And this coincides again with this large liquidation cluster that we can see on ByBit. So we can see that the shorts, the longs on ByBit are a little bit more over leveraged because their liquidation zones are quite close to price. In fact, looking at price as we see it now, I would expect that within the next probably hour or so, we will sweep down, grab this liquidity, fill this large limit order, and then probably make a push to clear out these late shorters right here. Moving to the footprint chart, we can see something pretty interesting. We saw aggressive selling down here at the bottom. And generally when we see aggressive selling at the bottom, again, that's an indication of late shorters. And this is exactly why we saw aggressive selling here. And as soon as that aggressive selling happened right here on this candle, this is where the aggressive selling happened at the bottom, price immediately reversed and probably liquidated them and grabbed them out. Price moved down again. We saw aggressive shorting again at these lows. And guess what happened? Price immediately reversed and took their liquidations out. So I'm not seeing aggressive selling yet at the bottom. If we start seeing another sign of aggressive selling at the bottom, it's a pretty good indication that we are going to move up, but just very quickly. We've only been able to generate about 1 hour of upswing every time people just get a little over eager to short the bottom. So be very careful with long positions right now. Be careful with short positions too. You have to be tactical. As we can see, aggressive selling for more intelligent traders came in here at a price point of around 63,900 to 64,000, and then up here around 64,000 to 64,100 as well. These are our first levels of short-term resistance. And then of course we do have all of these thick order flow imbalances up here as well. Interestingly enough, we do see actually volume declining in this range. So there doesn't seem to be the same amount of excitement on this third test down of support as there was back over at these zones. So the shorters are seeming to run out of steam. So it is possible that we will be seeing something like an upswing over the next couple of days. However, for now, as I posted in yesterday's market update, I have been sitting in cash for over a month. My 2% risk long got stopped out, so I am currently on the sidelines. If you guys didn't know, you can actually read my morning Bitcoin update on our website, crackingcryptocurrency.com, under news and insights. You guys can read this every morning, and then I share a more exclusive analysis with our Trading Academy members. Don't forget to get on the wait list for the official launch of our Crypto Trading Academy, which goes live the week of July 1st. And if you want to compete against us and earn prizes, make sure to click the link in the description and join our Fairdesk trading competition. Have a safe weekend, guys, and I will see you on Monday.